Hey, what's up, my friend? So in today's training, right, I'll share with you a specific trading strategy, right, that has a 88.89% winning rate. I'll give you the exact trading rules, the performance matrix of this strategy, examples of it, and much more. So with that said, let's get started. So first and foremost, right, what is this trading strategy about and why it works, right? So before we get started, I wanted to say that Larry Connors, right? He is the person that I learned from. So credits to Larry Connors, because without him, right, today's trading won't even be available for you to watch, because the idea, the concept, the strategy, I learned it from him. Okay, so the core idea, right, behind this trading strategy is that it's a pullback stock trading strategy. And here's the thing, right? Why is that, right? Because in the long run, you know that the stock market, it's in a long-term uptrend. Why? The reason is simple, because the stock market tracks what the economy is doing. The reason why the US stock market has been in a long-term uptrend since 1900s is because the economy in the US in 1900s compared to today has improved so much, right, over the last 100 years or so. Same thing for the Singapore stock markets, same thing for the China stock markets, right? Most stock markets out there, they are in a long-term uptrend because today's economy is much better than where we were like 50 years ago, 100 years ago. Okay, but here's the thing: just because a market is in a long-term uptrend doesn't mean that it goes up in one straight line. That isn't how it works, right? Because as you know, a market could be in an uptrend, but it has a series of higher highs and higher lows. And in the short run, right, because of panic selling, because of profit taking, because of fear in the market, right, the prices, right, in the market could go below its true valuation. Okay, so this means, right, that there exists, right, profitable trading opportunities, right, for traders like us to take advantage of. And this is what today's trading strategy is all about. We are looking to identify pullback in the stock markets. We are looking to identify fear in the markets. We are looking for the market to, to have a sell-off, right? Then we enter on the pullback, and hopefully we are able to profit, right, when the market makes the next swing up higher. So these are the rules, right, of this trading strategy. We are trading on the S&P 500 market. You can do it on the ETF. You can do it on the futures. It's up to you. Even if you want to, you can test it on your own local stock markets. You can test it on the Russell 1000. You can test it on NASDAQ. I leave it to you. Okay. Again, first and foremost, we want to be trading, right, when the overall market is in an uptrend. So our way to define the trend is that the S&P 500 must be above the 200-day moving average. So you just pull out your 200-day moving average. If the S&P 500 is above it, great. Now we have permission, right, to trade, right? If not, we will remain in cash. Our entry, this is very straightforward, right? Our entry is also otherwise known as the defining the depth of the pullback. We want the 10-period RSI to be below 30. Okay, so this is how we define our so-called trading setup, right? Our entry point. The 10-period RSI must be below 30. Once it's below 30, what we're going to do is that when the market opens the next day, we'll just simply enter using a market order. Right? Whatever price it is, we'll enter on market order. Our exit, very straightforward as well. We are looking to exit, right, when the 10-period RSI has crossed above 40 or after 10 trading days, right? Because sometimes the 10-period RSI can be below 40 for quite a number of days or weeks, especially during recession. So this is where we have a time stop, right? If after 10 trading days, the market, or rather the 10-period RSI has not crossed above 40, we'll also manually exit the trade, okay? But if the 10-period RSI has crossed above 40, then we'll simply sell it on the next day's open. Make sense? So let's have a look at a few examples, shall we? So if you look at this chart, what I've shared with you over here is just simply the chart of the S&P 500. This is the futures market chart. So let's have a look at how this trading setup looks like. So we can see this black line over here. We have is the 200-day moving average. This black line here. So the S&P 500 is above it. That's the first criteria. Second criteria we need is for the 10-period RSI to go below 30. So I've pulled out the 10-period RSI so you can reference it easily over here, 10-period RSI. And you can see over here, right now, the RSI value is 19. So this has met our criteria because if you recall, the 10-period RSI must be below 30. So when the market closes today, right, RSI now is trading at 19. So our setup is met. We are going to enter on the next day's open. So when the market open the next day, okay, we will simply go long over here. Okay. So what's the exit criteria? It is when the 10-period RSI crosses above 40 or after 10 trading days. So you can see on the next day, RSI has now crossed above 40. over here, okay, not exactly the next day, but 2 days later, RSI has crossed above 40, closed at 48. So we'll exit on the next day open, which is on this candle here. We exit on this candle open. So you can imagine, right, for this setup, your entry point is here, you buy here, and you sell here, just capturing this kind of like this one swing up higher, this one swing. Okay, let's have a look at another trading setup. So this time around again, the rules are the same, right? Looking to buy when RSI is below 30. So we have it over here again. Look at this. At this point on today, S&P is still above the 200-day moving average. So the overall trend is still towards the upside. Look at the RSI now. The value is 28. So we have the setup, right, is met, right, because the 10 period RSI is below 30. So what we'll do is we enter on the next day open. So next day market open here. So we go long on the next day open. Our exit is after 10 trading days or when the 10 period RSI has crossed above 40. So in this case, here it has now crossed above 40. So we exit on the next day open, which is somewhere here. So we can see we enter here, exit here. So thereby just capturing this, again, this small swing up higher. So this is pretty much how this trading strategy works, right? And again, I know this is just some simple chart examples, but so let me share with you the matrix, right, of how this trading strategy has performed. So many of you have asked me, right, what platform I use to do the backtesting. So this one is this platform is called Army Broker, right? You can see that these are the results, right, from 1996, right, all the way to 2019, which is the duration of the backtest from 1996 to 2019, about 14 years of data. These are the result, right, of every trade, right, that the trading strategy has taken. So if you want to look at the numbers which you can digest easily, okay, this is the Excel spreadsheet table that I've exported. You can see that over the 14 years, we have about 36 trades. Our winning rate over here is 88.89%, as I mentioned earlier. And the average gain, right, per trade, right, average profit per trade is about 1.43%. And your average loss, right, on each trade is about negative 0.87%. So overall, right, this is a it seems like, you know, something that will give you an edge in the markets, okay? However, there is a downside to this, and I'll explain this shortly. So moving on, right? How can you apply this to your trading, right? So first lesson is this, right? You want to look for buying opportunities, right, after a strong pullback in the stock market. So when you see the stock market makes a strong pullback, right, the thought process that you have, right, especially if it's still above the 200-day moving average, is that where can I look for buying opportunities? Maybe a pullback towards, like for example, the 10 period RSI is below 30. If you're a discretionary trader, you can use tools like, you know, candlestick patterns, support, trend line, right, to help you better time your entry, right? That's one way you can go about doing it. And one thing to point out is that you want to avoid shorting the stock market, especially, you know, I know it's tempting, you know, wow, strong bearish momentum in the stock markets, right? You know, it's time to sell, it's time to short the market is going to collapse. But here's the thing, right? Based on historical testing, right, more often than not, the price, right, tends to reverse back up higher. So as much as possible, right, you want to avoid shorting the stock markets, especially, right, if it's still above the 200-day moving average. Make sense? And the second thing is this, right? So as mentioned earlier, I said that, you know, the so-called downside to this trading system is that there are not many trading opportunities, right? So as you've seen over the last 14 years, we have about 36 trading opportunities on the S&P 500. So what you can do, right, to have more trading opportunities is to, for example, you can trade more ETFs. Like for example, you can trade the S&P 500, the Russell 1000, Russell 3000, Nasdaq, right, all this together to get more trading opportunities. Or you can also, you know, trade individual stocks, right, individual stocks in, let's say, the S&P 500. This will give you more trading opportunities, right, to exploit this this so-called inefficiency or pattern in the stock markets. And if you want to learn more about how you can actually apply this concept to trade individual stocks in the market, then I recommend you to get this copy of this this booklet over here called the Pullback Stock Trading System. So this booklet will share with you the exact trading rules, right, on how you can actually trade individual stocks in the market. So if you want to learn more, you can just go down to my this site over here. It's called pullbackstocktradingsystem.com. Okay, I'll ship you this a copy of this booklet. Anywhere in the world, in the US, it will be $9.90. If you're international, right, it will be $12.90. And again, comes with a 30-day money-back guarantee. If you read the booklet, you find that, you know, it's not really for you, just email us and we'll refund you in full, right? So again, the booklet, this trading system, right, the exact rules is in the booklet. You can see the performance over the last about 19, 20 years is all here on this website. So again, right, you can just head down to the website, pullbackstocktrading.com, get your copy. And with that said, right, I hope you found this training useful. I wish you good luck and good trading. I will talk to you soon.